Government spending like drunken sailors, according to Jamie Dimon. Hi, everyone, and welcome to another episode of Insights brought to you by Ainsley Bullion and the Gold and Silver Standard. Today, we welcome back Sam, who's been looking at what Jamie Dimon, the head of the world's biggest banks, has been saying that he thinks is going to happen to small businesses. So it's quite an interesting angle to look at, and certainly coming from someone who knows a thing or two about banking, one could argue. So how are you going today, Sam?
Great, Chris. Good to see you again.
Yeah, good to see you. So, starting off today, we hear about inflation being lower, and certainly we've seen some indications that it's pulled back. But you just wrote an article with some information about the NFIB talking about how small businesses are struggling from it. So, what's the data that they're looking at and that you were talking about in the article today?
Okay, so that's from the National Federation of Independent Business, and they're essentially created to support small businesses, and they've been around for a long time. So, according to them, small business optimism lowered again in August, and that makes it the 20th month in a row under its 49-year average. Now, what it seems like from the report is, based on some of the questions they asked, is it seems like inflation's still seen as one of the biggest problems they're
Hmm.
facing. And 28% of the businesses blamed their lower optimism on lower sales, and 24% blamed it on a rise in costs. Now, one of these things is very, very clearly inflation, a rise in costs. But the other is lower sales. And this shows that, the rising costs, which is still there. If you go to the store, you can see in
Yeah.
Australia as well. Where do they have to get the money from? Well, they have to pass on that rising cost to the consumer, which is why we see product prices going up. And the consumer is already depleted. The consumer is already experiencing a credit crunch, so they don't have that extra money to spend in the first place.
That's really highlighting something we've been seeing a lot recently, where it gets quite confusing because you've got, on the one hand, sort of somewhat positive take on the businesses wanting to expand, but on the other hand, this this whole idea that they can't because the sale, when they push the prices up, it reduces sales. It does become quite difficult to break it all down. The report specifically mentioned that small businesses were wanting to hire people, so that like there really is this drive to expand. But why aren't they doing that? And what could they be doing to fix that sort of situation?
Well, yeah, it says they want to hire people. They want to expand their business so they can start making money. The only problem is, and Jamie Dimon, the CEO of J.P. Morgan Chase, just said in a speech, he said, as inflation falls, so too does compensation.
Hmm.
So these businesses, they want to hire people. Well, they can't because they have to stick with the people they already have. In fact, they probably have to reevaluate the people they have and probably look at cutting hours or giving pay cuts or maybe even removing people. So trying to hire people and trying to expand is just something they can't do right now. And the government saying, hey, inflation's going down. This is great. And the central banks saying we're tackling inflation, it's under control. Well, that might be great, but that means compensation's going down. So more people have to get laid off or get their hours cut. And if you just got laid off, you're not going to go to, you're not going to go out and shop either. So it's kind of like we're having the negative um, spiral, the wage
Hmm.
growth spiral. It's going the
In
opposite way.
reverse, yeah.
Yeah.
Almost the wage growth doom loop, the
Yeah.
opposite of an upward spiral, I suppose. Um, Again, an interesting point because I mean, Jamie Dimon certainly isn't one to mince words. We also um, saw him with some quite fiery quotes that you added in from his speech because he does he gets quite passionate about this stuff. So those might give the over optimistic a bit of a reality check. Do you want to talk a little bit about some of what he specifically was saying?
Yeah. So one of the things he said was that, well, he blamed governments and he said they're spending like drunken sailors. And he mentioned the Ukraine war as well, which is it's quite a spicy topic to throw out there and talk about in the open as being something that's a unreasonable expense. And then he said, "quote If and when you have a recession, which you're eventually going to have." you'll have a real normal credit cycle. So it was kind of highlighting what was happening with, for example, big tech companies getting these big bloated investments, almost like meme stocks. Do you know? You know, they're traveling so far away from things of value, and then that kind of sick credit cycle has to be repaired and come back and get a reality check. And he was saying that the consumer, thinking that the consumer is strong today is a big mistake, because you have to wait about 12 or 18 months. All these things that have done in the past, like we've talked before, it's not just, change the interest rate or change something and then that's done and dusted overnight. It takes a long time to ripple down. And these small businesses, these are the people who were surveyed, not, Wall Street people speaking on their behalf or central bankers speaking on their behalf. These smaller businesses, it's clear they're still stuck with high inflation. They're still stuck with these high prices, and inflation's still bothering them. They're not in a good situation.
And I really like the point that you've reiterated here, that you've talked about in the past. These long lags, you really can't, like, when people are looking, they are looking a week, a day, a month, maybe, if they're thinking long term out. But these impacts take a long time to feed through the system, and I think that's really the point you make quite clearly today with small businesses. They're probably a lot further down that path. So even though we've had more than 12 months now of really heavy intervention by the central banks in terms of quantitative tightening and restricting, it takes a while for that to really impact at a level where it's pushing on jobs and pushing on individuals specifically. So
yeah, and he was saying to the small businesses as well, if you think you're doing well, it's a mistake. You have to wait.
Yeah,
and
that's right. Yeah,
we've seen that happen on a large scale. I think I mentioned before. I had to talk to a bunch of my clients who I was giving general advice to. Everyone was buying up the pound, the British pound, during COVID. As soon as the big COVID lockdown started and everything started crashing, some retail sales data came out and made the British pound skyrocket. Investors were piling in. And you know how much money it takes to move a currency, not just a share, but an entire currency of a major country. It was rocketing upward, and it took people a while to figure out, oh, wait, data is from the previous month.
Yes.
Before the COVID panic
it wasn't
happened.
even a thing. Yeah.
What are we doing? We're looking at data from before this happened, and this level of, this size of huge mistake can happen, and it does happen. And it's important that people say, hey, don't just think about this month or last month. You have to forecast what's going to happen based on what's been happening.
Absolutely. And the example I always like to use, sort of to back up what you've just said there, is when you think particularly about small businesses, it's difficult to get to hire talent, right? Like you go out into the market, you've got to find the right people, you've got to train the right people. It's a very expensive and time consuming process. So you don't let those people go straight away. Like the moment you get a bad economic print, you wait and you hope for as long as possible until you're sort of forced to let them go. And that would also be adding to this lag here, surely.
And there are laws as well. You can't just say, hey, this week's tough, get out.
Yeah,
so
we're
not going to pay you anymore. If they do, they could be in some further trouble.
Yeah, that's right. It's building a whole argument and case around that, and really showing that the business is struggling, and all that takes time. So yeah, really valid point. So probably to wrap up, have you got any sort of other reasons for concern based on the charts or what you're looking at? Stock markets, currencies you've mentioned, sort of things that pull together this theme that you've been talking about today.
Yes, well, look, the stock market's just kind of consolidating. It looks like, not sure if it's going to go up or down, but if you look at the US dollar index, which we talked about last week, you can see it's broken a major resistance from back in June. So all the way back in June, it was testing around the 104.3 level, and it got knocked down pretty aggressively. And that's where we saw, the stock market start to take off again. But what we've just seen is it's broken that major resistance with a huge green candle on the daily chart. And that is a very, very bad sign, because that just shows the value of the US dollar is going up, and it could be from plenty of things. One, like we mentioned last week, from people pulling out of their investments, pulling out of their assets and into US dollars because they're scared, because they want to have everything in dry powder, or because they need money to pay their bills. So they have to cash out of things. That creates short-term competition for cash. And the other thing is the credit crunch. Now, less dollars in circulation means each dollar's worth more. But if there are less dollars in circulation, that's a very bad thing, because how are you going to pay your debts? How are you going to pay your credit card if you can't get dollars? If people can't give them out, if they're firing people because they can't give them out, that's a huge problem. So this US dollar index cracking this support, it's gotten much worse than it was last week. And now we have a much higher ceiling for the US dollar. We'll see how high it ends up going.
That's something I've been watching quite closely as well, because it's sort of, I really thought it was going to roll over, and it hasn't. And exactly what you just described, the reason it hasn't is not good news. So generally, it's not going, the US dollar is not strengthening and going up because everything is great. It's going up because everyone is avoiding things that are looking a bit scary. So yeah, certainly one we need to be paying close attention to. And I'm sure you'll be monitoring that in the weeks ahead as well.
Yes, and that could mean a flight to safety as well, because the big rises in US dollar, again, they're relative to other currencies and they're temporary. So
Yes.
it's people getting out of things. It's dry powder. It's while interest rates are high. As soon as that flips around, things dump. So once that happens, once as Jamie Dimon called it, the normal credit cycle comes back, you might see asset prices rocket up again, and then hold that value even through while interest rates are cut. If they're lowered again, then you'll see the real run back to assets, because the money will be less and less valuable. So this could be a very good thing for repricing assets.
And just a lot of turbulence in the meantime while we wait.
Yeah.
For sure. All right. Well, thank you so much for that, Sam. Great insight again, as per usual. We'll keep an eye on that US dollar, and also watching what's really happening at that smaller business level, because it is an area that's probably often overlooked. So thank you for that.
Thanks, Chris.
Thanks everyone for watching. Remember, any questions, comments, reach out on the social platforms. That's us for this week. We'll be back on Tuesday next week with Alex to discuss all things markets and metals. Until then, have a great rest of the week and weekend, everyone.